Hey guys, can you guess what time it is? It is time for another Watch Trading Academy video, and today we're going to be talking about global currency specifically. So we're talking about global currency because people that are doing watch trading today may not actually realize that watches play a very significant role in the global currency supply chain, and why that specifically matters we're going to cover here today. So we know that watches are a global component, right? They are traded all over the world, meaning people from Asia buy from Europe, people from Europe buy from the United States, and vice versa. It is a continuously traded good across the globe. Now, this matters because there's something that specifically changes with each and every single transaction. The currency rate, right? Every time someone makes a purchase, every single time someone buys from another country, a conversion occurs. And so obviously, as we know with luxury goods globally, what happens when the dollar is really strong? Well, the US money starts to flow overseas to buy their luxury goods. And what happens when the dollar is very weak? The foreign money comes into the US to buy our goods. It's a very black and white concept in economics on how currency plays a role based on currency conversion rates. One of the things, though, that has happened in the watch market that we've noticed recently has been the fall of many top super wanted watches in the market, and ultimately caused a big fall in pricing. And this has confused a lot of people. Why would watches drop at such a significant rate? Well, some of them, while others not that much. And what has changed that? Well, we've already covered this in a previous video, looked at the real big difference between reseller and end user segments, meaning like whichever watches ended up in an end user's hand, it is most likely doing really well. A watch that ended up in a reseller's hand ended up doing really bad because they couldn't afford to keep it. And with the wipe of Bitcoin and some of these changes in the economics that have happened over the last 6 months, people have gotten hurt. So people have lost quite a bit of money on these things. Now, today though, we're taking a look at something very different that's happened, and that is it still a global currency? Is it still playing across the globe? And how have things changed as a result? So we know a couple of things recently that have happened in the watch market. Well, customs got a lot tougher on letting watches through without charging fees. So that's something that we've seen happen. So we've seen that certainly hurting the global currency aspect of it. The other thing we've also seen is that Asia was closed for quite some time, causing a lot of turmoil in watch pricing across the board going down, because again, a lot less demand added with all the loss in Bitcoin money. Now you have double loss, right? Now with Asia closing though, you also have something significantly different, is that, you know, in a normal state over the last 5-6 years, the US dollar actually wasn't that strong, causing a lot of money to come into our ecosystem to buy our supply, leaving a very, very limited amount of supply, right? Very, very limited supply here in the US, okay? So this is very, very important to understand, because this has caused over the last couple of, like the last year and a half, to really have an increase on the pricing that's occurring across the board. Limited US supply because, again, of a very weak dollar, creating a lot of income coming into the country buying our goods, means that pricing here in the US would go up unless you were buying again overseas. But once demand is that high and everyone's making money and supply is already limited and now even more limited to be found locally, it just brings higher pricing here at home, right? But something that has occurred recently that perhaps was something you haven't or have paid attention to, and it is that the dollar has gotten really strong, incredibly strong, as a matter of fact, that for the last 20 years it has now matched literally the euro. Now, this is a big deal because you have to understand that, as an example, an LV bag, this is a Louis Vuitton bag, here in America may cost $3,400, but in Europe, for example, that same bag costs 2,400 euros. Now, historically in the past, these numbers have been the same, because with the currency exchange, you would save very little money, and that number usually includes a tax that you even get back once you go shopping. So what does it mean when the dollar is stronger than the euro? Well, it means that your $3,400 that would be required to buy that bag now just bought you a bag at almost $1,200 discount. Now, because once you remove the tax from that, so you're basically paying $2,000 of your dollars to buy a $3,400 bag. Now remember, in a conventional setting, that would mean that you could bring this bag back, and assuming that it would still hold its worth because of its limited supply, you could still sell it here for $3,400 and literally make $1,400 from just buying a bag in Europe and bringing it back. Now, This is a big deal because it means that US money will now start to flood in foreign territory to basically buy goods there and not right here in the US. So if you've been feeling the pinch in the watch market, that liquidity has almost entirely left the game and no one's buying watches here, that's partially the reason why. Not only have people lost a lot of money in the markets in Bitcoin, but that money is also leaving the country and buying goods elsewhere at a significant discount. Actually, as a matter of fact, four out of the 5 last watches I've purchased all have come from Asia, one of which came from Europe, but the other 4 came from Asia. And that's a big deal, right? And the reason that's a big deal is because our dollar is stronger, enabling us to have more buying power elsewhere. How this changes everything is very important to understand, because obviously as prices level, remember, I have always said, if you've been following my training here at Watch Trading Academy, if you're part of our community, then you already know this. If you're not, then click the link in the description and of course join us. We have a community of over 10,000 incredible people that are on a day-to-day basis trading watches, talking, learning, and becoming better watch traders. And it's really an environment set for learning more than just trading. So it's not one of these groups where you just go sell and buy watches. It's a group where you're going to learn how to do this step by step, right? In addition to the training that comes with it. So make sure you click that in the link in the description so you can actually learn that. But one of the things I've been talking about for quite some time is that as currencies change, the cost for goods change. So let's assume this Louis Vuitton bag here was a Rolex Submariner, something much simpler to understand since we are, after all, a watch channel, right? Let's take a look here, and that Submariner might be, let's say, $8,000, right, with tax. Well, that same one in Europe would probably be about a 5,500 euro spread, right? So that means that here, right here in America, that Submariner with date, right, which costs about $8,000, would cost $5,500 if it was bought overseas, right? One thing to understand though is this is assuming, of course, that you can walk in a boutique and buy the Submariner, because a Louis Vuitton bag is much easier to get than a Rolex Submariner. You could still walk into a Louis Vuitton boutique and buy any bag. I'm sure there's a bag available for you to buy. However, many of us have seen the crunch that exists for Rolex, Patek, AP, etc. No one's just walking into a boutique saying, I'd like a Submariner. They're like, here, sir, how many would you like to buy? It unfortunately doesn't work that way, and as a result of that, this $8,000 advantage, this opportunity to take that extra money and say, I'm gonna go and buy as many subs as I can and bring it back, isn't necessarily existent, right? Because what happens as a result of it is that right here, you're starting to realize that, hey, even though my money is worth something, I can't purchase anything overseas because nothing is available brand new. However, on the used side of things are a little bit different, because the market is now no longer controlled by a price increase by Rolex or Patek once a year, but rather by a dynamic concept called market value, right? Now we know this because we've seen this play out in America quite some time ago, right? We saw that the market value of luxury goods during the inflationary period went to the roof. And literally they went to the roof because of this very basic concept of supply and demand. So what happens at a time where basically this $8,000 purchase can now just be a $5,500 purchase? Well, what happens if 5,500 euros, which is now technically the same as $5,500 because the currencies are 1-to-1. Well, what occurs since this watch is now no longer in the hands of Rolex, but is in the hands of a reseller, someone that means to make money off of this, this individual understands that demand increases for his watch and more of this money starts to flood over here. Now, in order to ensure he's getting the most for his money, because he also can't replace the good instantly, he increases his price now to 8,500 euros. And again, I understand that market values are different. Please don't judge me on the fact that this isn't the market values for a Submariner. I'm just giving you an example here. He raises his price to basically make the currency become a 1-to-1 again. This is how a watch is used across the board to facilitate an increase in cost over time. This is why we say watches are investments, because they're almost like a stock or a Forex investment, if that makes sense. It's like playing the currencies against each other. And here, once we raise the money, the person that is in this country that only buys from this country now has to pay $3,000 more, 3,500 euros more or so for the same exact good. This is why extreme inflation always takes place in specifically these weaker economies. Now, over the last few years, the United States went through a much weaker state of economical times, such as right after COVID. So we saw this happen right here in America as well. We saw that the US had such weak currencies that foreign money came in to buy our watches. By them buying our watches, pricing had to go up literally weekly to be able to offset that kind of demand, right? And that demand suddenly brought a price to almost double on a watch that didn't make any sense. We were looking at stainless steel Daytona models for $55,000. That doesn't make any sense. The model is 12,000 new, it's 55,000 used. That doesn't make sense. So why did that happen? Well, simply put, the supply and demand economics. Everyone's getting rich overseas, our currency is weaker, the money comes here, the pricing here at home goes up. Now, once the reverse happens, what happens to the money? Well, it has to come back down. So one of the things that we have to understand is that once that money goes up, this one comes down. So this equilibrium that's been happening across the globe for the watch market has been happening more and more recently. And you may have noticed that pricing has gone down. So the next question I get asked a lot is, if I'm looking at pricing, right? If I'm looking at the next wave of pricing, when will pricing adjust? Meaning, when will the drop stop? And this is a really good question, because what the hell is going on here? Okay, it doesn't want me to write this for you, but anyways, so when will it stop? And the answer is quite simple. A lot of people have asked me, well, okay, so my watch was here, available at MSRP, and it's going like this, but in the last couple of years it's gone like this, and now it seems to be coming down like this. So when will we see this drop coming down actually end? And the answer is quite simple. You see, every single watch has what we call a watch index. This is the natural evolution of the price of a watch. And what ends up occurring in a down market or in a collapse market is that the watch index price, which right here had some astronomical value rise because of either a currency play, an inflation play, or anything else, is going to find itself correcting. So this is where you can make the most money, but it's also the danger zone, right? So you have to be careful. And then you collapse. And during the collapse, two things happen. One, it meets the watch back at the equilibrium of where its increase should have been. But remember, there's temporary setbacks. There are outside factors like Bitcoin, stock market, and every collapse that has removed liquidity from the market. What happens when no one wants to buy your home and you have to sell it? Well, you have to sell it at a discount. So here comes the discount. But now comes the manipulative resellers and jewelers who are right here waiting, knowing the future of the market. So they're now all fighting at this rate, pushing the price back up. And this is basically where the dip occurs, giving us an opportunity to understand that this is why we say buy the dip, because all the jewelers are going to fight here and basically start to take this dip over to the price index. Now, jewelers aren't going to be buying watches here, here, and here above the price index anymore. And instead, they're going to ride the wave the normal way. So gone are the days where you're making 200-300% on a watch in a week, and instead now you're going to see gradual and normal growth over time. Now, why does this watch market go up gradually, even though it could be a bad economic time, where I've always said watches are a good edge against a recession? So why would that be the case? In a recession market, I thought all goods fell. I mean, I'm sure you've heard many podcasts out there calling for the end of the earth and the world is ending and all things will collapse. This is just like, what you heard in 2008. That wasn't the case. But anyway, so one of the things that happens in the luxury watches, you have to understand that at this time here, Rolex may have had an 8,000 price point, for example, for a watch, right? But as years go by and kind of start to move ahead over time, that price index of $8,000 becomes 9K, 9,500, 10,500, then maybe they don't have an increase here, then suddenly becomes 12,000, and over time, maybe 15,000. This just gives you an idea over 10 years, as the cost of money goes down, Rolex adjusts its pricing as well, and the price of the watches ends up going up. So what ends up occurring here at this mark here is that the new MSRP of the watch, where it would make sense, is right about 15,000, about 7,000, almost double what it was back then. So this, and manufacturers and cars are starting to do the same thing too. Make sure you follow my other channel, Exotic Car Hacks, for that. So right here, you have this basic boost where the market has basically doubled in dollars in what the price of the actual watch is brand new. But at this stage here, right about 6-7 years later after the release of the watch, it is now still equally hard in obtaining the same watch. So while it seems that price has increased, supply hasn't increased, even though demand has increased significantly, because each time they raised the price, maybe demand was 2 times here, maybe here was 3 times, maybe here was 8 times, then here it's basically 10 more times, but the increase of this model has basically increased double the price, and it still cannot meet demand. And that is what manufacturers want. They want to keep their brands alive for 10, 15, 20 years and keep this prestige alive. So even though now the same exact item costs $15,000, it still cannot be bought at MSRP and continues to rise from here, making the old watch, even in the worst of times at $8,000, seem like a bargain, a huge discount on a watch that still cannot be bought. Now, historically, I would also add that a Submariner today doesn't look that significantly different from Submariner 3 years ago, 5 years ago, and maybe has had some minor tweaks for the last 10 years. While the movement seems to be better and there are little updates such as a ceramic bezel, this and that, there is a significant difference in saying that Submariner is a brand new product versus just saying it is an updated product. And so the updated product doesn't usually warrant a 200% price, which then makes the used market go even crazier once the new one can be had for like 20,000. It's 15,000 new, it can be had for 20K brand new on the first week that it's out. That means that now the old one is naturally going to poise up anyways. This is why watches rise in general, and this is why they're good. So what we have seen over the last few months has been this dip taking its place. Now, jewelers and resellers would love for you to think that the watch markets have collapsed and they're not worth anything. And the reason they want to do that is one-fold. Their job is to buy here, right, at the lowest point possible. What drives the lowest sale possible is fear. Individuals who previously thought they could get $400,000 to $500,000 for a watch and now are stuck having to sell their watch for $200,000. This means that as long as the jeweler doesn't change its position, other people will be afraid to buy that watch thinking it's a bad bet, because the jeweler has been screaming the whole time that the watch market has collapsed and they have to be careful. In their quest for bringing good quality inventory at very low pricing, they have to have you believe that the entire market has taken the biggest crap it has ever taken and it isn't worth anything to hold a watch anymore. The more you believe that, the more they'll be able to buy your inventory at a dirt cheap rate. That is their job. That is why we say that this industry is basically honor amongst thieves. They're just individuals who understand how to play the game, and as long as they're not screwing each other, they're happy, but they don't care or have any morals past that. So I wanted to share that with you so you could briefly understand what happens at this level and why it's happening. So this is basically the game, how it works, and what's been happening. And this is the reason why watches are basically still a decent bet, even though the dynamic has changed. One last thing to consider, which is very important as it pertains to global currency and this ideology of buying dips, etc. Somebody once asked me, well, if we kind of know that dip's taken its place and now the watch market is back to normal, what are we seeing now and why are pricing in certain aspects coming down? Well, it really isn't. The market has leveled off now. Remember what I've told you, in recessionary periods, usually luxury items take first positions of basic depression, because during that time, the wealthiest are always the ones to take the first positions out because they don't want to be stuck holding the bag. So this happens and has happened all the time. Now, in this particular market, something that is very important to understand is two key things have changed in the watch market over the last literally 6 months. The first one is that the globalization and the trade routes and the shipping and all the things, the logistics of moving watches countries to country, etc., has been disturbed significantly with the closure of China. This has made people rethink where they're getting their sources of watches from and how the markets move. Secondly, supply chain for all the major manufacturers has certainly continued to go down. Even though you may believe a lot more watches on the market, a lot more watches are on the market from resellers who had been hiding them, not from manufacturers, not brand new. There will still be waiting lists and still inabilities to buy 200K Pateks at the store. That's still not just widely available. Patek's top dealer has actually said that they're getting 1/7 of the supply they were getting last year in 22, which is bizarre. And while more people would certainly buy Pateks if they're available, they certainly are not going to be openly available in any time in the near future, and that is how Patek wants it. So you will see that this excess amount of watch inventory in the market is strictly coming from the fact that, one, overseas wasn't buying in material because our currency is strong, so liquidity has left the US market temporarily. Secondly, you'll also pay attention and notice that one of the really important ways to look at this market is that now we're starting to see reseller goods that were on the market and flooding the market over the last 6 months slowly disappear. That has what stabilized the market, and it still isn't easy as it was 3 months ago, to buy a watch. And the reason for that is really simple, because 3 months ago, if you wanted to buy a watch, you were on a declining market where people weren't fighting for the watch. Now that the watch has settled around this dip area right here, right? It's now very competitive and everybody's fighting at these levels trying to buy their inventory for the next wave. So what they're doing is ultimately fighting each other for the bottom inventory. And so that's where the dip and the fight is now. But we're starting to appear around here now, where we're gonna start to get out and start seeing some motion back up. So if you haven't previously taken your bets or haven't previously been buying some of the cooler, more epic watches, you're waiting for that, take positions now. Don't wait, because soon you'll find that people aren't getting rid of positions because they're parking these positions long term. I bought a lot of really cool watches from my personal collection that are going to be sitting in my vault. Not really watches that I would have bought 6-7 months ago, seeing the crazy price hike, and I recommend you do the same if there was anything you wanted to personally own. There you have it. Here's another video for Watch Trading Academy. Please like, subscribe, turn on notifications, and let me know in the comments, what do you think? Do you think we've reached the bottom, or we still have quite a long way to go down? Catch you on the next video for Watch Trading Academy.